Dan Ives of Wedbush writing the following: while there will be some worries that the mammoth SpaceX will take away some oxygen from the tech semi-trade, this will be a short-term bump in the road. Dan joins us now for more. Dan, good morning.
Great to be here.
The appetite for this IPO. I think Lisa makes a fantastic point. A lot of people are talking about the same thing, just trying to get ahead of the index inclusion, aren't they?
No, look, I think that's definitely a play. And I think to say it's not would be wrong because of just the unique situation here from the indexing coming out of the gates. But look, at the end of the day, it does come down to it's viewed as a derivative of the AI revolution in terms of like how you're going to play space, data, AI. And look, it's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech. And I think that's what you're seeing. You're starting last week in terms of the sell-off that we've seen in semis. I think it's playing into it's a little white knuckle moment that we're going through in tech, just to see how the reception ultimately is going to be.
But it's not just this. It's pushback to equity capital raises elsewhere. The report of maybe Meta doing the same thing. We've had another player this morning suggest they're going to do the same thing, pushback in the equity market. Do we have the space for these names?
Look, I believe you do. And I think even if you look like Google after they did the offering, the view that you were going to have a big sell-off, but instead I think actually took it pretty well in terms of the stock. Look, it's $4 trillion that's going to be spent over the coming years. This is an arms race playing out. I don't care whether it's SpaceX, Anthropic, OpenAI, in terms of the capital raise that we're seeing. And I think these companies understand the demand's there. The difference is if we go back 6 months ago, it's like, show the monetization, is CapEx going to accelerate? It's happening. And I think now that there's more of a green light, I think that just gives further confidence. I think investors now are able to see around the corner because we just saw like this weekend, like our Taiwan checks, like further just tighter supply, which is just more bullish for chips, more bullish for what we see, across semis and obviously across memory.
That said, I mean, a lot of people can buy into the story and say this truly is a revolution, but say that the pricing is already pretty full, especially because as the supply becomes constrained, people are paying more and more for it, and they're raising debt that they have to pay back later with future revenues that go to that. At what point do you see that as having a viable argument?
Yeah, look, it all comes down to like monetization on the use cases, not just on the enterprise, but on the consumer side. Because look, you build it, will they come? So now it's all built, you see the demand there, but now it comes down to the next phase, and you got to see in earnings. The big reason we saw the rally that we have, it goes back to like obviously the negative sentiment in March, but then if you go through earnings in April and May, I mean, those were, I think Jalen Brunson in terms of what we saw in terms of numbers. Now it comes down to it's setting up for what I believe is going to be earnings over the coming quarters that will further support tech stocks. We continue to think NASDAQ 30,000 in the next 6 months.
You talk about the consumer-facing side. You have to see it there. Does that mean that you like Chinese tech stocks better than the U.S. that's catering more to corporate?
Look, but it's also why, like in Cupertino, what Apple's doing now, the start of at least having an adequate AI strategy, because on the consumer side, it will come and go through Apple. I continue to view them as a toll collector on the AI highway. But look, in China, robotics is where they're winning. And I think you cannot just view this market. It's not just the U.S. China, there's going to be a lot of winners, and we continue to view Alibaba, some others in terms of big tech in China, where that continues to really be, I think, just starting the next phase.
Dan, speaking of China, what do you make of the U.S. looking at potentially nationalizing parts of these companies, similar to what China does?
Look, it's this balancing act, and I think it speaks to like you're not going to see any sort of like what I'd be like nationalization, because the reality there is that it further, I think, stumps from a regulatory perspective. But
wait, you do think we're going to see this or not?
I don't. So I don't think in the U.S. you're going to see national, but I do think you will see stakes just like Intel.
Well, how's that not nationalization?
Look, I think that's the problem is that a big part of where Intel is today, it's because of the investment that you saw from Trump administration. Then it comes down to like, was that the right move? I'd argue in that situation, I think it was the right move, because you can't have Intel basically being a blockbuster video of tech. But I think selectively they're going to take stakes in different companies, because look, it is true. Like in what's happening in China, that is an arms race.
Let's talk about what we're buying. What happens to demand for the products that OpenAI and Anthropic are distributing right now when they start charging what it actually costs? what happens to demand? And what are we seeing already happen in C-suites around this country?
Look, I think you're gonna have to see the cost of tokenization continue to go down. You will see limits in terms of what we see on caps in some companies, but I think it also going to come down to like as companies monetize that, and as they know that those dollars are being spent for revenue that's accelerating within these companies, that's where all of a sudden the two charts start to cross.
Where do you see revenue acceleration because of AI adoption? Where do you see that right now?
Well, I think it's already started happening in the data layer. I mean, if you look at Snowflake, you look at Datadog, you look at Innodata. So it just started off, it was just chips. Now data layer. Then it's going to be software. Oracle obviously is going to be key in terms of what we see from them. Hyperscalers, I continue to think, are not being factored in terms of the true monetization, like a Microsoft being
Which ones?
a good example.
Microsoft and who else?
Look, I think, if I look at, go back to like what's happened in Google, and a year ago, New York City cab drivers bearish in Alphabet. Now, what they're monetizing on Hyperscaler, on Search, on Gemini, narratives are very easy where those change. And I continue to think this is third inning, one out, relative to the AI game.
You're more confident on that NASDAQ call or the Knicks going into game 4?
Well, I think Knicks game 4, but ultimately, I do think Knicks in 5. NASDAQ 30,000.
So they win in San Antonio. They win in Texas.
I think they win in San Antonio.
Okay.
Maybe
all right.
we should go.
Are you going?
We never know.
Okay.